Well, welcome everyone to our first quarterly update for Park at Arlington. We acquired it in February, so we're 5 months in and we're super excited. It is at 92% occupancy. So our goal this year and the next, well, by this year, I mean the next 12 months, is to just really ramp up where we are, what we're doing. And so I want to share that with you. We bought it, it's in Covington, Georgia, at the Atlanta MSA, 188 units. And so this is kind of walking you through every quarter. We will do this. We'll just come and talk about those expenses, where we are. We're going to compare it to what we underwrote. How are we doing against that? And if we're falling or we're right, what are the steps that we take moving forward? So again, so this is kind of Q2 2026, and we're looking at the last 3 months, so the last quarter, and again, we're comparing it to the underwriting. And so it actually came within 2% of our underwriting, which is really, really good. I'll talk about kind of a spike in expenses in May. There was a kid close that and quarters of our budget for compared to 400 for where we will be second quarter. So and you'll see that May was the only kind of, you'll see June bad debt property, so it's really we that is kind of just like high level where we are. So our net operating that is expenses, so all the income that comes into the property, all the expenses that go out, what's left is the 449,000. The total income we've gotten in Q2 that came in 30,000, so just shy of less than 2% underwrote. Net operates to 10% of what we underwrote. We're at, for Q2, we're at 91.4% occupant month. We distributed on $37. So that was the first payment that went out, and everybody should have gotten something in July, end of July. So that's kind of just high level where we are on the property. And as we go to be transparent, so we're looking at phone numbers, what we underwrote. So if you remember when I met with you, like I should assume now these are actual numbers. The total income was for the property was about 845,000, and what we actually, that was what we underwrote, and we came in at about 803. Operating expenses, the actual underwriting was 347, and then our actual expenses were higher, and that for the thing that happened in May. And that's where our net operating income came at. And so the actual underwriting for occupancy was 9. So there's room for improvement. We wanted to, and it's kind of, I want to make sure I didn't miss anything, but yes, that's where we are. And I told you May came from fire safety, and then the pool kind of renovation for the pool. And so kind of looking at that, right, you see kind of as you see kind of the biggest outlier in what we underwrote versus what we actualized in all the 3 months. Then that they were pretty similar, but that and bad debt we underwrote for 88,000, but we're actually at 44, actually at 4,000. So we're doing really well bad debt has been favorable across all quarters. But I told you the fire safety, we actually submitted the lender to reimburse that. So I think we'll get some of that back. And we already seen in June already see our expenses come down. So that kind of tells you that it was kind of one off. And so this is distributions have begun. We are so how to with renovations and kind of capital expenditures that we have, right? We will distribute, we're supposed to distribute percent preferred equity. We we distribute and that, like when we started talking about the view, but we'll make sure we have to make sure that we for capital expenditure for rainy day. And if we owe you to get to the 6%, then we'll just pay it we'll pay it out on catch up. So, and this is kind of what that looked like. So we paid out 50,000. Most of it went to Class B. Most of our investors are Class B investors, and we get the GP. We didn't get any money, and that's expected because we won't hit anything until we get to your 6%. And so this is what 5 months of operations look like. So count because that was we closed in February. So we were reconciling everything. So this is expected. Really looking at the last 3 months, you can see that dip because of expenses, but really stayed around 157 to 161,000. And that's landed kind of average. So average for Q2 is about 150,000. So our goal is to normalize expenses and continue to track revenue. So that's really under that we've been under Phoenix management, right? First goal was to clean out and kind of what happened. We're up, but again, it's going to come down and be normalizing. So our goal with our property management team is to be at above 92%, really be at 95%. And so that's where we want for 2001 property. We expect the operating ratio, so the op expense ratio to be anywhere from about expected to be like 40, like mid 40s. So 44 to, hold on, let me just make sure I'm not missing. Okay, great. 44, I just wanted to check the chat to make sure I wasn't missing anything. Can everybody hear me? I can hear better when videos off. Can everybody, how's my I lost power yesterday, so our internet isn't as good. Can everybody hear me well, or is it still breaking out?
We can hear you now, but it was breaking out earlier.
Okay. Is it better now? It's fine. I'll keep my chat open. Like if we need to move, or I will just turn my video off, which I can do that as well. Actually, I might just do that. Just that we please put in the chat, like if you can't hear me, I'll move around, but we lost power and I think the internet is wonky since then. Okay, so I was at kind of talking through expenses, but the goal is we want to be somewhere around like 43 to like 47 for the OpEx ratio, and so that's just income and expenses, right? That's where we want to be. And so I told you again, that's how much we distributed. So the goal, and I want to talk a little bit kind of more about that we talked about, but the purchase price was 33 million. We got 4 million of preferred equity, and so we're paying that back at about 15%. And that we have a front end pay and a back end pay that we're paying for that. But those are the first people that get paid, and after that, it's a limited partners, so it's our investors. And so the goal is to receive the 6% pref first, and then making sure we catch up to that. So that's our biggest goal right now. And then kind of we're thinking about whenever we buy a property, we're always thinking about exit, right? And so how are we positioning ourselves? Now we're really early to think about exit, right? But our exit goal is 2030, 2031. But really right now, we're just looking at it month by month. We're really looking at it because the property is new. We're looking at week by week, month by month, quarter by quarter. So the May spike was one off. So we're focusing on making sure that expenses normalize. We are physical occupancy in June, we're 92.3, but kind of average. So we went up from 90 and then kind of stayed at 92, and that's where we are. We had 13 renewals in May, and then we had 19 renewals in June. So our goal is as we're getting new tenants, we want to make sure that we're not losing the tenants that we already have. So, and our bad debt is where we are. So we focus very heavily on making sure that we're able to collect rent and figuring out like really neat ways that we can assist with rent if we need to, with collecting rent and making sure we stay on top of collections and bad debt. So the value add, what we're doing right now is very early on. So we focused on the pool because we wanted the pool to be open for Memorial Day. We closed the kiddie pool. We were always failing that, at least from we learned from the property management team from before that we were failing an inspection for the small kiddie pool. So we just closed it and then just focused on the main pool. All the fire safety deficiencies were cleared. We are now working on renovating the gazebo, the dog part, and the playground. So those bids are already in. And so we're working on what we're going to select, and then we're going to focus on renovating that. Well, also another thing we're going to do is it's a beautiful clubhouse space, and we are going to start figuring out how we can rent it out for birthdays, for just like events that events that people want to do. So we're figuring out how we can add that in as another like other income that we're bringing in. So, so that's our goal, right? Operating, we're also seeing how the market is doing, hoping that you guys can still hear me. But it's that the market is saying we're kind of checking out and making sure, seeing how they're doing, seeing how they're doing against when we want to sell. But one of the things I told the last investor group that I were really making sure that it is ready to sell in 5 years. So that's one of the reasons why we pick where we buy. And so kind of as we been looking at what has happened the effects and how we mitigated it. So expenses, that was a one time. We're going to hire safety because because that was more lender requirements. And so we did all of those. And those were all non-recurring, like the pool. We won't need to do that again. And we're already seeing like the expenses already came down in June. So that's very reassuring. The preferred equity carry. So kind of thinking through, we paid our monthly fees for the 4 million that we collected. And so we're behind on Class B, but we're still distributing, and our goal is to catch up. So that's kind of, and that preferred equity the money that we borrowed, we're only paying 6% upfront, and then 9% is compounding. So as soon as we hit that, the goal is now to catch up on where we're deficient in returning to our investors in terms of distributions. But don't worry, again, like that money is yours and we'll continue to distribute. And then from an operating cash, we were slightly negative at 7,000, but again, that was all due to me. And we've already started catching back up in Q3. Again, we're looking at the market. It's very new to it's very early to think about any market, what the market is doing, but we're constantly looking at it, especially because we have other properties in the Atlanta MSA. And so we're looking just to see how rent is growing. We're tracking, kind of looking at the broader MSA to see, making sure that like when we start renovations, it's the right time so we can get the bumps, the rent differentials that we expect to get. So we're looking at all of that and making sure that it's the right timing for us to do that. And then we're not forced to exit right now. We're just, again, it's very early, 5 months in, but we're always thinking about, what could go wrong and making sure that we're able to mitigate that. So just in wrapping up, I said I wanted to make sure be cognizant of your time, but just give you the important information, right? Our goal is just revenues on plan. Our goal is to make sure that like expenses like that happen in May don't happen, and we're already seeing that in June and July. And then making sure that like we're returning LP distributions, that's also very important for us. And then really just thinking about the end in sight. So really making sure that we're managing the property well, we're operating well, and then making sure that at the right time we're ready to sell. So that's just kind of a highlight of Park at Arlington. My goal is to do this every quarter. My goal is to do this every quarter, and the goal is just to come together. I'll stop sharing and maybe my video will be okay. And just make sure that everybody's on the same page and understanding. And also that's the goal of also the monthly updates. But if you have any questions in between then and now, so between monthly updates and now, if you have any questions, please feel free to reach out to me, and we can take it from there. And welcome everyone. If I didn't say hello, a bunch of new people joined the call. So welcome. If you have any questions, my apologies for the internet, but Xfinity is fixing it. I've gotten 2 text messages today saying they're working on it. But welcome to those I didn't say hi to, and it's good to see new. Feel free to put in the chat. While I have you guys, another deal we're really excited about in the Atlanta area. Time your schedule, please join. If you have questions about that before, if you want to meet with me, meet with the team, I'd love to connect with you. So I don't see any clamoring questions in the chat. So I'll give you back 12 minutes of your time. But it's so great. Thank you everyone for joining tonight. I really love all the faces that I've seen. And please forgive me. Every time it says my internet is unstable, I cringe. Thank you. Okay, bye everyone. Have a great evening.